Hey guys, how's it going? This is JD coming to you. This is our my intro for you, the video intro to the 3-day market workshop with Trader Mo and myself, guys. We're blessed to have you. I appreciate you, trusting us with your time, and we're definitely looking to give you as much value as possible in this 3-day period. And that's one of the reasons I wanted to come to you first with the video to maybe look to get a jump start on a few things. You can pause the video, get your pen and paper, or you can figure out if you're going to record it or whatever. But I'd like to go over a few things, different topics. First one, I wanted to go over some terms, things that we might use, terms that we may use throughout the workshop. And some, I don't know what levels you're on in your investment or investing journey and trading journey, but let's start off with the types of stocks. And that's the biggest question when I guess a new investor, new trader comes to the market. They try to figure out, well, what should I pick? What should I invest in? And there's scanners. You can look. You can go to alert services. Go to Twitter. You go to Facebook and follow groups of people, traders, investors who seem like they have it in line, and some do, some don't. But what we want to do is provide that foundation, the framework for you to build your own process, your own almost like your tool chest, toolkit. When I scout, I know what I go to the ballpark and I have my tools of my trade. I mean, really, your eyes and your instincts are what guide you, and that's the final. That's the grassroots. But let's start off right here. First one, blue chip. Of course, it's a large, stable company that are continually profitable. These are the types of companies. A lot of them have dividends. Uh, Oftentimes you can trade these companies and also invest in them. So the blue chips, they're the ones that the stability is there. We're not as worried about heavy market swings or quick bankruptcies. I mean, even though right now that we're going through the pandemic, we have a lot of economic uncertainty. So even the blue chip sector has been hit. But typically, blue chips are going to be your most stable. Then you have your speculative companies. They're going to be the momentum companies. You'll get the IPOs. You'll get the Nikola's, what is the Genius, Beyond Meat. If you don't have a track record, they consider you speculative. They still consider Tesla speculative, excuse me. Um, I don't think they can even quantify or classify a company like Tesla, so that's where they fall into that. But also the next sector, growth. I like, I like all these, but growth stock is one. It's basically companies that are expected to have high earnings, which are reinvested back into the business to fund development. That is a process or a game plan for long-term returns or longevity, and growth stocks can fall into the blue chip category as well. Uh, value investors. Now, well, I'll say growth. You want the earnings reports become very important. The bottom line. Uh, so that's something that we can read up on a little bit further. We can dive into that when we get into the analysis style. But value stocks viewed as undervalued in the market, but investors see potential. There is the phrase. What is the phrase where it's there's arbitrage in the market. There's sometimes where they're misvalued. Stocks could be undervalued unfairly or properly undervalued or overvalued. So you look for that that vacuum in the market to where there this stock is I see upside. And that's going to be more from a research perspective, and maybe even in a sector where the sector has taken off, like one of the subsectors or industries that I'm paying attention to is the big data industry. They're tracking our movements, tracking our dollars, and all the companies like MongoDB, Splunk, New Relic, things they track our data. But also, Apple, Amazon, Google, Facebook. data is the new currency. So sometimes you could look within that market or in a sub market and say, okay, what's another sector that or a sub market that might blow up at some point down the road? And you start thinking of, okay, are we looking at a cloud security? Okay, cloud software, cloud storage, things like that, AI. That's how I kind of run. I go down a rabbit hole of thoughts, and then I'll show you how to do that a little bit later. But the next type of stock is income. They normally pay high dividends that provide investors with a consistently growing income stream. So dividend income is key for a lot of long-term investors and also a lot of baby boomers, a lot of our grandparents and uh, parents, and hopefully us. But if you look now, pay attention to the earnings reports. And Mo and I have said this has been the new normal where companies are pulling guidance, their forward guidance. They're not predicting what they're going to be able to do for the future uh, due to COVID-19. And then a lot of them have either lowered their dividends, halted dividend, or even just basically, we're not going to pay a dividend this year. And that is the rarest of anomalies. So that's something that dividend income is important. But right now, I think we're stepping into a new normal. And if that's the basis of your research, dig a little deeper to see what your company or the company you're interested in, what their plan is moving forward. And we can do that by going to the website. Uh, they have the shareholders meetings, and they have they'll release the minutes or even the webinar, the recorded webinar. So that's it's a lot. That's homework. It's something you can dig into when you really like a company. And that's how you kind of go. You want to go. I always say 10 toes down, or you know several layers deep into your investigation. Next one is penny stocks. Low price stocks with high risk that trade at no more than $5 per share. They are a shiny object to the new investor because a lot of times you see a single digit stock, sometimes under $1, and you're thinking, and you read the prospectus and it says, we found a new cure for kidney disease and blah blah blah, and it's going to phase 1 trials, and we're looking for an 800% return. They're long shots. They're risky. There are individuals who make a market in flipping penny stocks, and that's pretty much what it is. And we're going to get into that. It falls into the pump and dump, falls into capitalizing on fear, irrational exuberance, and just that panic that they can have, or just the mania that comes with it. That's where you see a price run up, and you've seen the movies, The Wolf of Wall Street, Boiler Room. They all show where you can pretty much lead the masses over a cliff if you get the right, have enough charisma, have a shiny enough object, and you put it at the right time, and you put out there at the right time when people want a return and they need help. Some companies prey on the situation. So I'm not a fan of penny stocks, but I've traded them because that was one of the first things I looked for when I came in. I was like, I can be a millionaire. This thing is at 3 cents. I'm gonna put $1,000 in it. I have all the shares, and you realize that you have all the shares, and it's done. It runs up to, let's say it runs up to 20 cents, 18 cents. The next thing that happens, you think, hey, I need to put more, and this thing could go to $1, and I'll really be rich. And that's when the dump happens, and that's one of the time-tested tricks of the trade. But next one, cyclical, dependent on the health of the economy. And that's something that kind of falls into one of the first terms I want you to look up. And we're going to keep doing, we're going to have homework, but guys, write this one down. Market breadth. Let's see what I have pulled up. And it's just going off, there we go. Market breadth definition. Like when you see a market expanding or declining, and when I say expanding, price increasing, Are we looking at multiple sectors, or are we looking at one sector or one subsector or sub-industry that's leading this move? So look at this. I want you to kind of understand it. Market breadth indicators analyze the number of stocks advancing relative to those that are declining in a given index or on an exchange, stock exchange, such as New York Stock Exchange or NASDAQ. Positive market breadth occurs when more stocks are advancing than declining. This suggests that the bulls are in control of the market's momentum and helps confirm a price rise in the index. Okay, guys, that's your first term or first vocabulary term. I want you to be comfortable with understanding that. And we can go right here, and we're at finviz.com. I was just on investopedia.com. I'm going to show you some quick hacks for picking up market information, news that you can hop right to it and be ready to move. Finviz.com, I love it because it gives me the breakdown of my three major indexes, the Dow Jones, the NASDAQ, and the S&P 500. And also right here, we look at market breadth. Now Mo will go even further into this. That's his area. He's a resident economist, but right now we're bullish, 52.55 advancing to 2096, and we'll look at FinViz a little bit later. But you can get your news. You can run a scan on quite a few things to find what. Now we'll talk about these come into candlestick patterns. That's your next term right here that I want you to look up. And guys, keep track of this for me. That'll be, so I'm keeping track. 1, market breadth. Candlestick patterns will be 2. And it's important for me. Candlestick patterns are they are the backbone of technical analysis, and I'll give you that shortly. All right, a candlestick chart. Candlestick charts are a technical tool that packs data for multiple time frames into single price bars. This makes them more useful than traditional open, high, low, close bars or simple lines that connect the dots of closing prices. Candlesticks build patterns that predict price direction once completed. Proper color coding adds depth to this colorful technical tool, which dates back to the 18th century Japanese rice traders. Okay, guys, the next move, what we want to do, we're going to go for the next term. We've done penny stocks, blue chips. We're going to go the analysis style. I'm going to give you another term I want you to look up. And I'm giving it to you right there, and you know right where to go. Just want you to be comfortable with these terms and phrases. Technical analysis definition. What is technical analysis? Technical analysis is a trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading activities such as price movement and volume. Here's what I do. Technical analysis for me is paramount. I need to know what's happening from a historical perspective. I want to see price trends. I tell you what, let me go to Caesar's Palace. It was hit hard, and just like all the casino stocks, I picked up a trend, I picked up a pattern that I saw, and I hopped into this thing, and I'm looking for a long-term play in Caesars. But if I watch it, it's gone up into, I'll tell you right now, this is an ascending triangle that I've made, that I charted out. Next one turned into a bull flag, which that's something that you'll learn a little bit later. Have a trading range, basically a channel, a breakout from that channel. Now we're trending along the 10 exponential moving average. I've taken my moving averages off, but I'll switch we won't go down this road right now. But technical analysis is number 3. And what I'd also like for you to understand, long position. When someone says, "Oh, hey, I'm long, uh, I'm long the, I'm long Caesar's Palace, I'm long Apple, I'm long, I'm long the market, I'm all in long." That basically means right here, a bullish position, or the same as long. A long position, also known as simply long, is the buying of a stock, commodity, or currency with the expectation that it will rise in value. Holding a long position is a bullish view. A long position is the opposite of a short position. That's our next one. And so long is number 4, short is number 5. And what is a short position? A short position, or a short position. Basically, you can say this like, "Hey, I'm short Boeing. I've been short Boeing for 6 months." It doesn't refer to the duration or the length of a trade. It represents my view on its future price action. So a short position is created when a trader sells a security first with the intention of repurchasing it to cover it later, repurchasing it or covering it later at a lower price. Basically, guys, when you want to short a stock, we have to borrow that stock from our broker. You don't have to call in and say, "Hey, let me borrow your stock." But the process is like that. You borrow the stock, and let's say the stock is currently trading at $100. You borrow 100 shares, and it's like, I'm going to borrow my friend's lawnmower. And, I borrow the lawnmower. As I'm walking home, someone says, "Hey, I'll give you $300 for that lawnmower." You just borrowed it from your friend. Someone offers you $300. They want to buy it from you for $300. You can go to Walmart and buy that lawnmower for $50. You say, "Okay, good. Give me the 300. You get $300. You go to Walmart. You purchase that same lawnmower for $50. You pocket the $250. Take it back to your friend. Basically, you return the lawnmower back to your broker. You've made $250. Now, the same scenario, you're walking down the street. The person offers you $300 for the lawnmower, and you say, "Okay, yeah, I'll take the deal." But you hadn't checked the market. There's a spike, and it had been raining for months. Grass is out of control. Lawnmowers, the supply is down. The demand is high. That lawnmower is $600. You have $300 in your pocket from the lawnmower. You need to come up with another $300 to basically make up that deficit, and then return so you can buy the lawnmower and return it to your friend. I kind of went around the way for that, but that's the story that I've been told for years. It's Now I'll read it to you from the get-go right here. A trader may decide to short a security when she believes that the price of that security is likely to decrease in the near future. There are 2 types of short positions: naked and covered. A naked short is when a trader sells a security without having possession of it, and that's the majority of the short plays that are occurring. Now, if we sell something short and we have possession of it, if there's a margin call, or that basically the trade needs to be closed, or we're called on it, they would basically take our shares. Basically, a covered short is when a trader borrows the shares from a stock loan department. In return, the trader borrows, excuse me, in short, the trader pays a borrow rate during the time the short position is in place. In the futures of foreign exchange markets, short positions can be created at any time. You can read a little further. You have a video down here, a different explanation. You want to get, I'm not actively shorting stocks. I use puts in place of shorting stocks, and that's going to be the next. We'll do calls and puts. We'll say stock options first. just, there we go. Stock option. And definition: a stock option gives an investor the right, but not the obligation, to buy or sell a stock at an agreed upon price and date. And there are two types of options. You have puts, which is a bet that a stock will fall in price. Basically, that's synonymous, or it's basically the brother of shorting a stock, or a cousin. Or a call, which is a bet that the stock will rise. You're looking, if you're going long a stock and you want to use options as your vehicle to participate, you would buy a call. If you would like to short a stock, but you would like to use options as your vehicle to do so, you would buy a put. And options give the trader the right, but not the obligation. Um, you can look at this video and get a little bit more comfortable with that, and we'll dig into that. But strike price, contracts, premiums, I would really like for you guys to read this stock option definition. That's something I want you to get familiarize yourself with. Even though we're focusing on stocks early on, I don't want that segment to hang you up at any point on day 3. Okay. Now, what I would like to do, we're going to go to my next thing is going to be, we've talked technical analysis. I want you to hear about fundamental analysis. Okay, the definition of fundamental analysis, because we have different analysis styles. I'm primarily a hybrid analyst. I look at my stocks from multiple ways, but my essential way, my primary way is technical. I look at the charts, I look at the movement, I look at price action, but I look at the news events, and I also will do a quick fundamental analysis. I'm not a deep fundamental analyst, excuse me, but I do take a look at the numbers. Fundamental analysis is a method of measuring a security's intrinsic value, and you can look that up. That's a bonus one. Intrinsic value by examining related economic and financial factors. Fundamental analysts study anything that can affect the security's value, from macroeconomic factors such as the state of the economy and industry conditions to microeconomic factors like the effectiveness of the company's management. This is a good one to look at. You can go even deeper onto it. And let's see, one thing I want to do, and I know we'll talk about this. This is Mo's area, Can Slim. And William J. O'Neill, he is basically the founder, creator of Investors Business Daily, an amazing periodical, but you can get it online. It comes out weekly. It's a system basically of selecting growth stocks using a combination of fundamental and technical analysis techniques. That's a hybrid. That's a beautiful hybrid. It's a beautiful combination, Can Slim. So please read this section right here. Can Slim is a bullish strategy for fast markets, as the goal is to get into high growth stocks before the institutional funds are fully invested. That's a great move before we get ahead of the big money and let the wave take us forward. Can Slim stocks cannot be bought and held as much of the value as being priced in for the future, meaning any slowing in the growth trajectory or the market as a whole, the result in the stock being punished. Now, we'll let Mo dive a little bit further into that. Can Slim, also referred to as, well, they spell it out however they want, identifies a process that the investor can use where each letter of the acronym stands for a key factor to look for when purchasing shares of a company. This is when it breaks it down. I'll let you guys go into that segment and read that for yourself. Please read the Can Slim and just kind of gather an understanding of the acronym. All right, and let me show you a quick way that I don't do it a quick way, but when you're searching for stocks to build your baskets, because I have baskets of stocks, guys. I'll put it on my watch list. This would be my basket. I'll have a space basket, biotech basket. That's from our biotech manual. Coronavirus, cruise industry, defense sector, gaming, hotel lodging, restaurants. And you can open it up. It'll pull that down, and let's say, wow, Chipotle has just gone on, just crazy. Wow, okay. Um, or what is this? Papa John's, and no, thank you. But Texas Roadhouse. Those are just some of the baskets that I operate in, or I'll go. I'll figure out something where I felt that the mall-centered real estate investment trusts, the REITs, were going to be hit because of the people weren't paying, going to be able to pay for the rent, and it hit really hard around Corona. Try to recover, fell, and it's trying to recover now. This is Simon Property Group. They have a lot of strip malls. Then we have Taubman. They have a lot of. I think they do the what are the outlets. So it's kind of a crazy looking chart, but they found some type of recovery. But it's still a lot of uphill battle. But anyway, guys, I build baskets like that, but also, you know, just sitting and I'll sit and talk with my wife. I say, baby, what's going on, and let's talk about the airlines and what do you think? Are they going to recover? Blah blah blah. And then we'll kind of go down the wormhole, and there's something called where is it? Anti-fragile. Let's see, not fragile, but they pronounced it anti. But it's not that. There it is, anti-fragility. Okay, anti-fragility describes. This is a bonus term. Describes a category of things that not only gain from chaos, but need it to survive and flourish. And that's real. It's kind of touches on my heartstrings right now because of what's going on with you see with George Floyd, Tamir, all the way back to Tamir Rice and Emmett Till. Uh, the conflict between the the police, the African American community. Bam, that's a conflict. Then the other chaos that's going on is the pandemic. So one of the things that I was looking at when the pandemic was going is a company called, what is it, APH, Alpha Protec. Uh, let's see. Alpha Protec, is that? There it is right there. Okay, when it first happened, everybody was buying masks. I was able to hop in. I caught a little. I rarely look at recommendations on Facebook, but there's a trader in there. Man, he's an older guy, and he mentioned Alpha Protec, so I looked at it. I think I bought a call on that. That thing ran up, and I think I made over a G off of that. And that pump and dump. But this is an anti-fragility company. There's a history of it where it spikes and ebbs and flows during chaos. So anytime the market was down, Alpha Protec was popping. It was up, and it's still kind of doing that, but it's not as much as it was. There, then we go back years back. Some type of issue was coming, and it found some type of anti-fragility. But also, what I was looking at during the chaos, I built a basket for what is it? Find you guys firearms, and I just kind of lost track of them because I was like, yeah, I was worried about when at first everybody was, they were shuttering every business. People were staying home, and I was like, man, uh, the bullets and just weaponry. So I kind of paid attention to it, but I lost track of Smith and Wesson, and their earnings are on the 18th. So pay attention to see how that price goes for SWBI, Smith and Wesson. They've been on a run. Had the sell-off, the Rona hit, and it wasn't just big time sell-off. They were already kind of low, but they found some support and had been running. So we'll see how that goes. Ruger also has been running, and that's how I was building baskets. And Ruger's setting up for something else too. So I don't know what it is, but it looks like it possibility of a breakout. There's a gap there, but we'll talk about that a little later. And so anti-fragility is something I know some of our members right now that who are taking the workshop are work in disaster in the disaster field, and this might be something to where you can dig a little deeper into this segment of the subsector of the market. Let's see, anti-fragility. There's a book. Yeah, there it is. There it is. Anti-fragile. The guy that wrote it, Nassim Nicholas Taleb, also wrote Black Swan, and I listened to a few of his books on Audible, and he's an investor, but he also predicts a lot of things that are going down, so it's kind of divisive. But that's pretty much where we are, guys. I look at the news. I'll go through I'll try to find something that catches my attention. Whether it's if I like to pull up the IBD digital paper itself and just basically kind of go down the headlines. Finances, gloomy about finances, stock sell-off, virus. Okay, that's biotech for me. It's just nothing but biotech. The trends, biotech, disinfectants. Clorox falls under disinfectant for me. So CLX would be in there. IBB would be under my biotech list that I'm making. As we go forward, Vroom, I need to find out about this IPO. Something that's on there left 118%. I probably missed the entry, so I don't jump right into an IPO. Fed sees slow recovery, but they're putting steady influx of money in, so we'll watch the SPY. That's the S&P 500 ETF, and economic data is improved, mass extinctions accelerating. I keep going down, then you go the chip sector. Okay, 5 chip sectors, Teradyne, but if they say the chips, let's go AMD, NVIDIA. We have Qualcomm. Keep our eyes on that. Kroger. We're building a basket right now off of just one page. Boeing's on here. Lululemon fell. I don't know how many percent, but they're in a bearish trend. This first page has our everything ready to go. We have Tesla, Starbucks, Netflix, and then once we have Nikola, we have a new the hydrogen battery. So this is how we build the baskets to dig deeper. And then if you want to go to the next page, but it takes a weekend. It takes throughout the week, late nights, and then you kind of come up with your game plan of like, hey, I'm looking for some long-term investment possibilities, and I'm going to look at blue chip and growth companies. But guys, that's going to be a wrap, and I want to thank you for listening, and let's get started on Wednesday. Go ahead and study up, and man, I'm happy to have you. I know Mo's happy, and we'll get jumping. All right, you have a great one.